Construction sites are inherently volatile. In seconds, severe weather, ground failures, or equipment collapses can destroy months of physical progress. When that steel hits the ground, a critical economic question immediately follows. Whose balance sheet actually absorbs the financial impact of the damage? The answer usually lies in the FIDIC Red Book 1999. This is a standard international construction contract used for projects where the employer provides the design. It acts as the definitive framework that dictates who pays for the wreckage. But before you consult the contract's rules, you have to accurately categorize the physical, geographical baseline of your site's inherent risks. This diagram maps out the site risk profiles. The top half represents a greenfield project, which involves building on undeveloped land. Here, your primary threats are logistical mobilization, theft across open borders, and total exposure to weather and ground uncertainty. The bottom half shows a brownfield project, which entails construction on previously developed or active land. The threats shift entirely. Now you face the risk of damaging existing assets, complex interface failures, and shutdowns of third-party operations. Regardless of the environment, these physical threat factors are active before a single shovel hits the dirt. Because these risks are unavoidable, your financial survival depends on understanding how the legal framework shifts the liability away from you. Under most standard arrangements, the contractor bears the risk for the construction of the works. If something breaks during the build, the contractor is typically responsible for the fix. However, the FIDIC Red Book contains an explicit mechanism to reverse this liability. It is detailed in Subclause 17.3, titled Employer's Risks. Subclause 17.3 lists exceptions where liability shifts to the employer, including war, riots, or design faults. When these strike, Subclause 17.4 activates. If the contractor suffers delay or financial loss due to an employer's risk, they legally claim that time and money back. Clause 17 protects the contractor's timeline and budget from disasters completely outside their control. Assigning legal responsibility is only the first step. You still need actual liquidity to rebuild the damage. This brings us to Subclause 18.1, which outlines strict administrative rules for the insuring party, the entity legally required to maintain project insurance. This clause establishes a non-negotiable hurdle. The insuring party must submit formal evidence that policies are active before any site work begins. Subclause 18.2 details specific mandatory coverage. It mandates insurance for the works, the plant, the materials, and the contractor's own equipment. While Clause 17 assigns liability, Clause 18 guarantees the liquidity exists to keep the project from failing if administrative rules are strictly followed. Perfect contracts and comprehensive insurance policies are useless without physical proof of the trigger event. The first tool is the site diary. This serves as the daily, granular record of the project's physical reality, recording exactly who was on site and what conditions they faced. Next are the photos. These provide time-stamped visual evidence of the site's condition before, during, and after an event occurs. Finally, the notices and registers. This is the formal paper trail required to legally activate the protections found in Clauses 17 and 18. These three documents form an unbreakable chain of evidence. They are the sole mechanism that translates a physical disaster in the field into a financial recovery. Pause here and audit your own project. Have you defined your site's risk baseline? Are you operating in a greenfield environment or a brownfield one? Check your administrative compliance. Do you actually possess the 18.1 formal evidence of insurance in your files today? Review your daily evidentiary habits. Have you taken and stored date-stamped site photos of your critical path today? Success under the FIDIC Red Book depends on your ability to map physical risks, master Clauses 17 and 18, and obsessively document every drop of rain.